What's going on, and welcome back to the channel. In today's video, I want to talk a little bit about real estate investing, right? And there's many different ways you can invest in real estate. And before I get started, just if you can tell my background, a little change of scenery today here in Palm Beach doing some work. But anyhow, investing in real estate, right? And one of the things is, speaking of being in Palm Beach, the real estate market has absolutely boomed in Palm Beach. So if you could imagine, right, 3 years ago, homes were selling for 3 million, 4 million. Now they're selling for 8 million, right? One of the ways of real estate investing. Now, the main topic I want to talk about in today's real estate investing video is more so about rental properties, right? When you invest in real estate and investing in rental properties, you're going to have a steady income stream, right? If you purchase it correctly, whether it's a long-term rental or whether it's a short-term rental, if you purchase it correctly and you cash flow, say the 1% rule, hypothetically you buy the house for, $500,000 and you're making $5,000 a month, that's a solid income. Now, with that being said, right, you want to make sure you're cash flowing positive or close to breaking even, because the biggest thing, right, is you either have a cash on cash return, whether you pay cash for the home or if you finance the home, right? So hypothetically, you finance the home and your mortgage rate's, $4,000 a month, you're making $5,000 a month. You've got to account, right? Hey, I'm taking home $1,000 a month. But then you got to think, okay, if I have it for 12 months and I have $1,000 a month coming in, you got to account for expenses. Hypothetically, AC goes out or something like that. There goes your income. Now, with that being said, your long-term growth, and we'll get into this more, is you're building equity in your home, right? So steady income stream, appreciation over time. So like we talked about, right? You buy a home on Palm Beach, you purchase it for, 3-4 million. 3 years later, you sell it for 8. That's appreciation over time. So imagine you have that, right? Now you have just for easy arithmetic, like we talked about earlier, your rental property that you purchased for $500,000, it appreciates to 800. You have all your expenses paid for. Now you have $300,000 that you made. You don't really worry about the $1,000 that you're making a month, because that's pennies at the end of the day. You're really making your money on the appreciation long term. Now, with that being said, you have tax advantages with this. If you mortgage it, you can write off your interest payments for your tax deductions. If it's an investment property and it's a rental, you can write off expenses. So hypothetically, you have an LLC in the name. You're picking up clients from the airport, or you're, what else can you do? You're taking them out to meals. I don't remember the tax code, but I think my accountant this year said, real estate wise, you can't take out clients. You can't deduct that from your taxes. I'm not 100% sure. I'm not a tax guy, but back then you could write that off as an expenses and reduce your taxes. Now, then we can talk about leverage, right? With rental properties, you can leverage these properties. So hypothetically, you have 30% or 40% equity in the home, you still owe the bank 60%. What you can do is you can take 20% out of that home and take that 20% as a down payment and go purchase another home. That's leverage. So you can leverage the home in a couple different ways, but then also you got to think diversification, right? Okay, as we all know, this week is April, I think today's the 9th or the 8th. The stock market last week was not so good. I think it dropped to 3,000 basis points, which is the biggest drop we've seen in a long, long time. But your real estate's not dropping 3,000 points. How do I 3,000%? I mean, I don't know what's a good analogy for that, but diversification, right? Now, going back to building equity in the home, right? If you buy it for 500, it's now worth 800. You have $300,000 in equity. We talked about leverage, right? You can pull from here to here to here. I had a little caffeine this morning, so I'm all amped up. But you can take that equity, refinance your home, and going back to the taxes, if you refinance that home and say pull out $300,000 worth of equity, that's tax-free. So with that tax-free income, now you go buy 2 other rental properties. Now instead of making $1,000 a month, you're making $3,000 a month. And now this can eliminate your day-to-day job if you know you have enough rental properties, but also if you have a 30-year term. In 30 years, when you're say 60 years old, you have 5 rental properties. They're all, you know, now paid off. You slowly pay them off over 30 years. Now they're all paid off, and say they're worth $1 million. You have $5 million essentially in cash that you can refinance, pull out, which is now tax-free, invest wherever you want, whatever. And now you still own the 5 properties, but now you've got, you know, $4 million in cash. So we can really go down a whole rabbit hole, but I just kind of wanted to leave you guys with that today. And how many different ways that you can invest. Now, you can also get really creative with seller financing. I mean, that's a whole nother topic. You can get really creative in different ways. I'm about to sneeze. Excuse me. But I kind of wanted to leave you with those main topics, right? The investing in rental properties, the rental properties or the steady income stream that you're going to have, the appreciation over time, the tax advantages / deductions you can get, how you can leverage those rental properties, how you diversify your portfolio, and how you're going to build equity over time within these properties. So with that being said, go buy some rental properties. Call me. I'll send you some rental properties that are great investments, and we can talk. Subscribe, like the video, and we'll talk soon.